Good afternoon and welcome to Deloitte's Debrief Tax webcast series in Asia Pacific. Our webcast today is from our new tax controversy series. The environment for tax controversy in the Asia Pacific region has picked up and accelerated rapidly in the last 6 years since the OECD's G20 Finance Committee met in Brisbane, Australia. And whilst we've seen the tax office activity abate during COVID and governments providing a lot of incentives to businesses, that focus has now shifted back to tax collection. And therefore, we believe that a series focusing on tax controversy is both timely and extremely relevant in Asia Pacific. Given this environment, we've prepared a special three-part mini-series to introduce our controversy debriefs. The first of which was earlier this month and focused on general anti-avoidance. Our second session last week focused on transfer pricing. And today, our third session will go into the administration by tax authorities and controversy practices in the region. My name is Neil Pereira, and I'm a tax and legal partner based in Deloitte Sydney. Together with my colleague Colin Little, who's a legal partner in Deloitte Sydney, we have the pleasure of hosting today's webcast and the ongoing series. And we'll be presenting on Australia today. We also have three special guest speakers with us today, all of whom are tax controversy experts in their regions. Cindy Sukuman, who will cover Indonesia, Kevin Ng, who will cover mainland China, and Ketan Bed, who will cover India. You may access each of our bios on the left side of the screen. Before I go further into the agenda for today's webcast, I'd like to take a moment to highlight some of the features of our webcast console. Firstly, all users are on listen-only mode. If you have any content-related questions, you can submit them at any time in the Q&A box at the bottom right of the screen. We'll do our best to respond to your questions during the presentation, or otherwise we'll get back to you shortly after the presentation. Secondly, all PC users can maximize or minimize each box at your convenience in the webcast. You may also explore the icons at the bottom of the screen. If you'd like to download today's slides and related publications, please go to download the links box. On the other hand, mobile device users can view the slides and answer the following question on screen. Thirdly, if you require an attendance record for this event, you can download your PPE certificate by clicking the Request PPE icon at the bottom of the webcast console. Over to you, Colin.
Thank you, Neil. And now to our topic for today. Actionable moves have been made in the area of BEPS and the automatic exchange of information, with the majority of countries endorsing the OECD's recommendations. Some jurisdictions have taken unilateral action, for example, in implementing a digital services tax, highlighting the difficulty in achieving consensus and the potential distortion and mismatch of tax regimes. We've seen countries like the UK take the lead with various BEPS initiatives, and in our own Asia-Pacific region, many countries, including Australia, are close behind adopting BEPS rules, and especially in adopting new transfer pricing rules. In today's session, we wanted to explore how the tax authorities operate in relation to the administration of tax disputes in a selection of countries. And each of our speakers will take us through the key laws and issues arising in their respective countries and their own practical experiences with local tax laws. After that, we'll have our speakers in a panel session provide their observations on the themes we believe are most relevant to controversy across the region.
Thanks, Colin. And this brings us to the polling question of the day. The question is, how many countries have you experienced tax audits or reviews in the last 12 months in Asia Pacific? 1 to 2 countries, 3 to 5 countries, more than 5 countries, everywhere we do business, or don't know, not applicable. Now, whilst we wait for the results of the polling question to come in, Colin, could I ask you from a personal perspective, what have you seen in Australia recently in relation to the number of formal audits being conducted or the manner in which they're carried out?
Thanks, Neil. The Australian Tax Office in Australia is, of course, continuing with its formal audit programs, having paused briefly last year due to COVID. However, the ATO is taking a much more strategic approach to the matters it takes to formal audit. It is engaged in a number of different reviews, the pre-compliance reviews, the STAR reviews, which you'll go into a little bit later on into this afternoon's session. which seek to identify at a global level the risks and tax risks that attach with particular countries. It then takes a much more selective process as to which ones it will then take to form the audit.
Thanks, Colin. Now we have the results of our polling question on screen, and I think we can see that the predominantly in the audience, certainly there's 1 to 2 countries where tax audits have occurred, but we can also see quite a large response in the 3 to 5 country category. Some are probably also in the don't know, not applicable, which could potentially mean that they don't have any audits being conducted, which would be quite fortunate. We can see very few in the more than 5 countries or everywhere we do business. But certainly everyone, a lot of people in the audience do have an appreciation for the fact that tax audits are being conducted and are certainly on the increase. So I'd like to start now with the Australian experience. Colin and I will go through this, and I'll just kick off with a slide relating to the tax office approach in Australia. A few words about the tax office approach. Our slides are available for download, so I won't go through them verbatim, but some key points to note. The ATO's compliance program in Australia has been fully funded in a number of years prior to COVID, the federal budget. There have been large-scale changes to resourcing at all levels of the tax office, incorporating commercial and chartered experiences from the very top executive level right down through to graduates. There's been a significant uptake of data analysts in the tax office, which has refocused the view on how audits are being conducted. The tax office also has a very particular view relating to BEPS and an attitude to change behaviours for undesirable structures versus necessarily collecting the highest amount of tax for audit activity. The ATO does have a large number of programs, which I'll get onto on the next slide, and does like to put out public rulings and what it refers to as practical compliance guides, informing taxpayers of what the ATO views are on particular issues, which is designed to, again, change behaviour without necessarily the need for an audit. We anticipate much more analytics to be conducted through the use of CBC data. And an important point to note is it doesn't necessarily mean that disputes don't go through to litigation. Litigation is, of course, very much open to the tax office, but it is quite selective in how it goes to that. Many of you are also aware of the APA program in place in Asia Pacific across all the different countries. This is still very much going on in Australia, but we'll see that, we do see that this may require sign-off under an ATO income tax program before agreements reached on the transfer price. So the ATO's approach to tax review goes over changed over the years. We now see quite a broad-based approach across all segments of companies. As I noted, based on a number of key factors, but with an overriding theme of tax governance. I'll go through a quick summary now of key ATO programs. So we've seen in the last couple of years the STAR review program, which is known as the Streamlined Assurance Review, which is now leading into Next Actions, a follow-up program to the STAR review, and what's referred to as a Combined Assurance Review, which combines income tax and the GST program. This is focusing in on the top 1,000 cross-border multinational companies. From there, we have the top 500 program, which deals with 5 private groups. The next 5,000 program for smaller private groups, a medium and emerging private group program, private equity-owned program, and then also the ATO is conducting specific issue reviews. So we will go through an analytics program based on tax returns that have been filed and local files that have been submitted, and pull out key issues that is considered relevant to those particular taxpayers. And as I noted before, there's an overriding role of tax governance and assurance in all of this. So the focus on tax governance is quite unique in the region in Australia, and as yet there are no statutory rules prescribing an approach for companies to follow. Yet it's something that the tax office rates taxpayers on and informs them of risk. So in effect, it does play a large part in the Australian tax review process. I'll pass over to Colin now, who will take us through the controversy life cycle.
Thank you, Neil. If we can move to the next slide. What I've presented here is the various steps in the tax controversy lifecycle in Australia and the way that the tax office handles tax disputes. As you can see, the tax dispute lifecycle really starts at the time that the income tax return is lodged. In addition to quantitative data in terms of income and expenses, there is a lot of qualitative data and schedules that need to be completed, including significant transactions, the reportable tax schedule, and the international dealing schedule. And this really forms a risk blueprint for the ATO in deciding which taxpayers to take through an audit process. Having gone through an audit process, if the ATO disagrees with the tax return as lodged, it will issue a position paper and give an opportunity for taxpayers to respond to that position paper. If the ATO still doesn't agree and issues you with an amended assessment, then you have a right to, firstly, an internal review within the tax office of that assessment that's issued. And this is really in two forms. Firstly, you can seek an independent review of the audit team's decision. That independent review, although it's called independent, is still within the tax office, but is staffed by officers that are separate to the audit team. If that fails, we then go to an objection process. And although it's an internal step, it's really the start of the litigation process, because the grounds of objection that you identify carry through to the court process. Of course, if you're dissatisfied with the objection decision, you can then appeal at first instance to the tribunal and then to the federal court. The initial stages of appeal, you can appeal based on a question of fact or a question of law, but then any subsequent appeals are limited to an issue of law. Neil, back to you.
Thanks, Colin. So what I wanted to do now on the next slide was just to start talking a little bit about the formal powers that's available to the tax office. I just wanted to quickly look at a judicial comment of the consolidated investigation, which I think sets the scene. Justice Lockhart stated that voluntary disclosure by taxpayers of confidential information, including their assessment of income and outcomes, is vital to the efficient operation of Australia's tax law. So I think this statement underpins the ATO's approach generally to disputes. Whilst the ATO does have formal powers, they tend not to use them as a matter of policy, which may be quite different to many other jurisdictions. And in fact, some taxpayers may even prefer a formality. I'll now go through three main types of powers and those available to the tax office on the next slide. So firstly, we have a section 35310, which is the most common notice, and it's a notice to produce. The commissioner under this notice may make wide-ranging inquiries that do not have to relate to a particular taxpayer or to a particular topic, provided they relate to the performance of the commissioner's functions and administration of the Act. This has a very wide scope and is quite difficult to challenge. Practically, the commissioner could just withdraw and reissue the notice. It has been found to be available to the commissioner for fishing expeditions. These notices do need to be considered very carefully to ensure that they're valid and issued, and the taxpayer is only required to provide the information. Next, we have a 353-4 notice, where the ATO is empowered to enter premises and take some information as considered necessary. This is quite rare in the corporate space, but it does happen. We have seen it happen. The next one is section 35325. The ATO can request by way of an offshore information notice to give or produce information or documentation the commissioner reasonably believes relevant to the assessment of tax-related liabilities and offshore information. So I would just state that in Australia, confidential communications that are made for the dominant purpose of providing legal advice to the lawyer and client in anticipation of or during litigation is protected, although the tax office does seek to challenge this area. And lastly, just in relation to compliance, so a failure to comply with these notices can give rise to range of penalties. I'll just note that no financial penalty arises in relation to section 355 notice in relation to offshore information. But if the notice is not responded to, then any information pertaining to the notice will not be admissible later in evidence. I'll now pass back to Colin to talk about the
If we could move to the next slide, I just wanted to highlight the importance of evidence in dealing with the tax office and a tax dispute. There's a particular feature of Australian tax law that if an assessment is issued by the tax office, the taxpayer bears the burden of proof in proving that that assessment is excessive. Even if the tax office takes a guess at what the assessment should be, it's up to the taxpayer to prove that that is wrong. And really the evidence gathering stage starts when the transaction is conducted, making sure that the commercial purpose is documented, particularly in areas such as Part 4A and transfer pricing. The ATO has the power to recharacterise a transaction if it finds that there's no legitimate commercial purpose. Also making sure that the legal documentation that is created matches the economic substance of what has occurred, so that the form of the transaction meets the substance. And taking witness statements, if necessary, from key drivers of a transaction is often a good idea, particularly because when you're tax officers, we saw in the controversy life cycle, it can oftentimes be 3 or 4 years after a relevant transaction. So capturing the reasons as to why a transaction was entered into in the way that it was is critically important in succeeding in a tax controversy in Australia. Back to you, Neil.
Thanks, Colin. So I think we've covered Australia now, and I'd like to pass over to Cindy to take us through Indonesia.
Thank you, Neil. Good afternoon, everyone. Hope all of you are keeping safe and healthy. I will start my presentation with explanation about landscape of tax audit and dispute in Indonesia. The first of the cycle is a tax audit process. Tax audit for tax refund requests must be finished by the tax auditor in 1 year. Other type of tax audit are finished usually in 1 or 2 years. And as a result of tax audit process, the tax audit will issue tax assessment. In the case the taxpayer disagree with the tax assessment, the taxpayer may dispute the tax assessment by requesting a tax objection process to the regional tax office. The objection letter must be submitted within 3 months after the issuance of the tax assessment. Tax objection process must be finished by the regional tax office in 1 year. And as a result of the tax objection process, the regional tax office will issue objection decision. As a highlight, we observe many of the objection cases are still unfavorable to the taxpayer, maybe potentially because the executor of the tax objection is still within the structure of the Director General of Taxes, or DGT. In the case the taxpayer still disagree with the tax objection decision, the taxpayer may continue to dispute the decision by requesting a tax appeal process to the tax court. The tax appeal letter must be submitted within 3 months after the issuance of the tax objection decision. The process with the tax court generally takes 1.5 to 2.5 years until tax court verdict is issued. The important and critical highlight here is related to the tax appeal process. The tax court system is not under the DGT structure. That's why we observe that many taxpayers receive tax court verdicts that are favorable. Lastly, in relation to the verdict issued by the tax court, both taxpayer and the DGT may still request for a judicial review to the Supreme Court. The judicial review under the Supreme Court will commonly take 1.5 to 2 years until a verdict is issued by the Supreme Court. We observe that the DGT submitted many judicial review in relation to the tax appeal verdicts, which are unfavorable to the DGT. So in overall, as a summary, the whole tax audit and dispute process will take quite lengthy time from the starting point until the very final decision is made. Next slide, please. Then it is also important to learn about various perceptions by taxpayers about their experience dealing with the tax audit and tax dispute in Indonesia. This slide describes some important comments such as taxpayers perceive tax audit causing uncertainty, leading to an increased trend in tax dispute cases. Tax audit can be repetitive and continuous process, and many taxpayers must face same tax audit corrections from the previous year tax audit, even though such corrections are still being under dispute process. This is mainly because tax auditor also use the previous year's tax audit working paper as one of the main references. Next one, sometimes difficult findings were made by the tax auditor solely based on the tax audit indirect method approach, which use analytical testing audit techniques such as reconciliation of bank cash flow, account receivable movement, and etc. And eventually, the taxpayer's explanation will also require a lot of collection of detailed documentation. In relation to dispute process, the cash flow issue, where the taxpayer must practically pay in advance for the dispute case. Otherwise, there will be risk to a significant penalty amount in the future when taxpayer fail to win the disputed case. So overall, the whole tax audit tax dispute process requires a lot of efforts and costly and slow in time. However, the reality is that taxpayers will still choose to continue the dispute process to the tax appeal level because tax court plays very important role for the taxpayer. Many tax disputes resulted in favor of taxpayer only at the tax court level. Now, let's go to the next slide to understand the triggers of the tax audit. It is very critical to understand that requests for tax refund will trigger an automatic tax audit. There are also other triggers for tax audit as described in this slide. However, these other triggers do not cause an automatic tax audit. The tax office may decide to perform a tax audit based on its discretion and consideration about the tax gap and also human resources as well. These other tax audit triggers include, for example, taxpayer in loss position, taxpayer performing corporate actions, change of bookkeeping, and result from exchange of information. One additional important highlight is that lately, the tax office also increases issuance of letters requesting clarification to the taxpayer. This is not within the formal course of a tax audit. However, based on the responses submitted by the taxpayers, the tax office may also use this program to eventually escalate the process to be a formal tax audit process. Next slide, please. This slide describes impacts of the recent global economic downturn and also COVID-19 to tax audit and dispute trends in Indonesia. Basically, there are many tax incentives recently introduced by the government of Indonesia to help the domestic economy. The notable incentive is in the form of reduction of corporate tax rate from 25 to 22, and eventually 20% only, starting from FY22. Relaxation of tax objects, and relaxation of tax subject, and also relaxation of interest penalty rules. This incentive will reduce the DGT tax revenues. Please note again that the prevailing Indonesia tax system calculates the FY20 corporate tax installment based on the previous FY19 fiscal year profits, which is generally better than actual FY20. Then there is a possibility that many taxpayers may be in the tax overpayment position because the FY20 profits are reduced due to the economic downturn. And remember, as mentioned earlier, tax overpayment is an automatic trigger for tax audit. Also, at the same time, there are maybe also additional pressure for the tax office about their tax revenue collection from taxpayer in FY20 or 22. Now, we reach the final slide. Some of the key takeaway from Indonesia perspective: tax audit and dispute process are generally challenging tasks for taxpayers. Therefore, taxpayers must be aware about the triggering points. Economic downturn may systematically trigger taxpayer to be in the tax overpayment or tax refund position. This may potentially increase the trend of the tax audit and tax dispute. If tax audit is unavoidable, make the best preparation. For example, perform review on corporate tax, withholding taxes, and VAT, and consider the benefit of new incentive regarding lower interest penalty on voluntary amendment versus correction made during course of tax audit. I think that's all of my presentation. Thank you for your attention, and now back to Neil.
Thank you, Cindy. That was certainly informative, and some interesting points that you raised in relation to the ongoing nature of audit activity and these rolling year-on-year audits, and also the automatic trigger points. That's quite interesting for an audit. We'll now hear from Kevin in relation to China. Thank you, Kevin.
Thanks, Neil. This is Kevin, the China tax controversy leader based in Beijing. In my presentation, I will talk about the tax controversy matters about mainland China. As some of you should know, Hong Kong has a very different tax regime under the one country, two systems arrangement. And given the time constraint, I will only cover the situation in mainland China. First of all, I will talk about the hierarchy of tax authorities in mainland China. If you look at the right-hand side of the slide, simply speaking, it comprises of the State Administration of Taxation, the SAT, to provincial and municipal tax authorities, county and local tax offices. The Chinese tax authority has a vertical management structure such that the tax authority at the low level is directly subject to the management of the tax authority at the high level, and the local government has no direct management right over the tax authority. But for the purpose of attracting investment, the local government sometimes will reach out to the tax authority and give certain influence with respect to taxpayers' business or the tax treatments. In terms of functions and powers, the SAT is the highest tax authority in mainland China, responsible for the drafting and interpretation of tax policies, manages and supervises the work of tax authority at lower levels, while the local tax bureaus are directly responsible for daily tax-related administration as well as collection in the respective location. If you look at the left-hand side of the slide, it shows the division of labor within the SAT. According to different kind of taxes, the tax authority are divided into different departments, such as income tax, goods and services tax, property and action tax, in order to better manage the administration of tax. I believe some of the audience here may have prior experience in dealing with some of these tax officials. Next page. In the next few slides, I will spend some time to talk about the process and approach adopted by the Chinese tax authority for tax inspection purposes, which include tax audit, tax assessment, and tax risk management for large enterprises. Tax audit is conducted by the Tax Audit Bureau across the country based on the instructions given by the SAT. Broadly speaking, audit targets comprise of two categories: those internally selected cases by the SAT, and secondly, informers cases. Every year, the Tax Audit Bureau will, based on the directions given by the SAT, to randomly pick a number of audit targets from the local systems, which include 20% of the taxpayers in the key tax revenue enterprise list, in Chinese 重点税源户. They make use of big data analytics as well as the information exchange mechanisms with other authorities or countries to identify the audit targets or to identify high-risk tax matters for audit purposes. Tax audit is usually performed by two tax audit officials for check and balance purposes, who will assess all accounting books and vouchers, as well as other relevant information of the tax targets. One interesting observation is that it's getting common for the tax authority to request the target taxpayers to conduct self-audit first. If the tax authorities are satisfied with the outcome of the self-audit by the taxpayers, they will simply rely on the results to reassessment and close the cases. The upside of doing the self-audit is not only to avoid on-site in-depth audit by the tax officials, but more importantly, avoid being classified as tax evasion, which will induce additional penalty, ranging from 50% to 5 times of the tax underpaid, depending on the merits of each case. Therefore, if you're lucky enough for being selected for tax audit, it is always advisable to proactively seek for self-audit, and at the same time, try to evaluate the expectations of the tax officials so as to avoid on-site audit as well as heavy penalty. Next page. The other type of tax inspection is tax assessment. Tax assessment is different from tax audit mentioned earlier, as it is not conducted by the Tax Audit Bureaus, and more importantly, it focuses on the information provided by the taxpayers in their tax returns. With the continuous digitization of the tax systems, the Chinese tax authorities have managed to analyze the tax returns and other financial information collected from the taxpayers, and to build tax-oriented models and compile different indexes or financial KPIs for different industries, sectors, and even geographic locations. They will use the indexes and KPIs to gauge and compare the truthfulness and accuracy of the tax returns collected through the automated systems. In case of abnormal situations, the tax authority will reach out to the taxpayers for more information or explanation. If necessary, they will even pay on-site visit to look into the matters. Taxpayers should be cautious in dealing with this kind of additional requests, as the tax authorities have adopted very powerful big data measurement tools and have established teams of experts from different departments to better their tax assessment work. In other words, the tax authorities are not beating the bush, and they can be very specific in their ask. Next page. Now I will talk about tax risk management for large enterprise taxpayers. Large enterprise taxpayers, in Chinese 大企业, is a relatively new term created by the SAT. The SAT has selected over 2,000 group companies covering MNCs, state-owned enterprises, and privately owned groups according to the magnitude of tax payment as well as their operations in China. This lucky group is being handled by Large Enterprise Bureau, which is specifically set up by the SAT in order to look after the tax risk management of these large enterprises. In other words, the SAT wants to give special attention in order to better serve the tax situations. Again, the Large Enterprise Bureau will make use of the tax risk models and the KPIs developed for tax assessment to gauge all the tax-related activities of the large enterprises. Each year, the tax authorities will select around 20% of the large enterprise group for risk management assessment, covering all taxes for the last 3 years. The selected large enterprises will be asked to conduct self-investigation first within a specific time frame and prepare and submit their own reports to the tax authorities. The tax authority will review and assess if they need to perform any extra work. The whole process usually lasts for 6 months to 1 year, depending on the scale of the taxpayers. More attention will be paid to significant and complex transactions of the large enterprises, such as group restructuring, business model transformation, or cross-border transactions. As the large enterprises are more sophisticated in managing their own tax risk, the review is usually handled by a number of very experienced tax officials coming from different departments, and all conclusions of the review are to be reviewed by a designated panel formed by the Large Enterprise Bureaus. Next page. After looking at the tax inspection in China, in the following slides, I will talk about the possible solutions that taxpayers can resort to in case there is disagreement or dispute with the tax authority. I will focus my sharing in tax administrative appeal and the tax administrative litigation. Next page, please. In a tax administrative appeal, taxpayers should file an application to the high-level tax authority, which will consider the merits presented by the taxpayers. If the higher authority accepts the application, the lower-level tax authorities, that is the in-charge tax authority, should provide information to support the original decision. Please note that administrative appeal will focus on the specific administrative acts and the supporting regulatory basis upheld by the lower tax authority, not the facts of the case. There are a number of points to note. In practice, the tax authority will discuss thoroughly before responding to the taxpayer's appeal, and therefore, you can imagine the chance of reversal is rather slim in practice. In addition, if the administrative decision involving additional tax payment, taxpayers is required to pay the tax in dispute or provide guarantee first before applying for administrative appeal. Next page. If the taxpayers want to seek relief from People's Court, they should do so within 15 days from the day of receiving the appeal decision from the tax authority. If the People's Court accepts the case, the tax authority, as the defendant, shall submit details of the administrative act and the supporting regulatory basis. The People's Court shall make the first trial decision within 6 months from the date of filing. If the taxpayers are not satisfied with the decision, they have the right to appeal to the higher-level People's Court. The higher-level People's Court shall make a final judgment within 3 months from the date of receipt of the appeal. In a litigation, taxpayers can ask the court to review the legality of the regulations on which the tax authority rely on, and if some regulations are manifestly unfair, the court will hold in favor of the taxpayers. However, according to our observations, usually the judges in the decision process will respect the interpretation or discretion of the tax authorities. Taxpayers should also be reminded that, similar to administrative appeal, if the administrative decision involving additional tax payment, they must settle the tax payment or provide guarantee first. Also, the tax administrative appeal is the antecedent procedures. In other words, taxpayers must go through the administrative appeal before filing an administrative litigation. Another interesting point to note is that in the past decade, the number of tax administrative appeal and litigations reported has quadrupled. Amongst the reported cases, it's encouraging to see more and more verdicts are issued in favor of taxpayers. For example, in 2018 and 2019, the Supreme People's Court of China published a set of exemplary tax cases. We can notice some rules or common practices commonly adopted by the tax authority were reinterpreted or overruled by the judges. Although China is not a case law jurisdiction, People's Court have very limited power to dispose tax matters. In light of the Supreme People's Court precedents, we are optimistic that in the near future, legal remedies, including appeal and litigation, may become a common and effective alternative to preserve the rights of the taxpayers in China. Given time constraint, I have to end here. And thanks, everybody. I'll pass the time back to Neil.
Thank you very much, Kevin, for your view of both the inspection process and the court process in China. I'll now hand over to Ketan, who'll take us through the experience in India.
Thank you, Neil. Good afternoon to everyone. India has witnessed a major change in the last few years in the way in which tax assessments are being conducted. Intent of the government is to not only make the process more timely and technologically competent, but also more admittedly taxpayer friendly. And the ultimate goal of the tax authorities is to minimize avoidable tax litigation. Upon a few of these changes, the first one is the new buzzword in the Indian tax compliance system, that is a faceless tax regime. Thereafter, we would be looking at a few alterations made in the Indian tax alternate dispute resolution framework. And lastly, we will touch upon a few timelines extended due to the COVID pandemic, and also some more amendments made which are taken towards providing the taxpayers what is known as tax certainty. To start with, the faceless tax regime. The Indian tax assessment system has peculiarities of its own, which included personal appearances before the authorities, not only for small and petty matters, but also for attending and furnishing data during the course of tax assessments or audits, explaining the details to the officer and trying to convince them on the positions taken by the taxpayers and the correctness of the same. This involved not only a lot of time and effort spent by the tax professionals, but also had over a period of time led to some unwanted tax consequences. The tax department in India had first initiated the paperless assessment in October 2015 in case of a few non-corporate taxpayers using email communication as a pilot project across 5 to 6 locations. Thereafter, in 2018, the tax department came up with a faceless and paperless assessment scheme. The tax department came up with mandated e-proceedings for all audits, submission of our details, etc. But what was continuing here was the interaction between the taxpayer and the tax officer. This was intact. That is, the taxpayer would know who is the tax auditor and simultaneously could contact the tax officer, and also the tax officer knew whom he or she was assessing and could have reached out to the taxpayer. In September 2019, another move was made by the tax department notifying the e-assessment scheme 2019, providing directions on the applicability of the said scheme to eliminate personal interaction between the taxpayer and the tax officer. However, the said scheme too could not reduce the communication intervention interactions between the taxpayer and the tax department. Next slide, please. To simplify the tax system and to increase the trust between the taxpayer and the income tax department, a scheme called the Faceless Assessment and Faceless Appeal Scheme was launched in 2020 under the larger scheme of transforming taxation, honoring the honest platform. The objective of the scheme was to reduce physical interface between the income tax department and the taxpayer, enable optimal utilization of resources, and introduction of team-based assessments, thereby reducing the arbitrary exercise of discretion by the tax officers in conducting tax audits and appeals. A proper framework has been laid out for these purposes by the Central Board of Direct Taxes by setting up of a national e-assessment center, regional e-assessment center, assessment units, technical support units, etc. Detailed procedures have been laid down for e-assessments, and procedures have been laid down for setup of selection of cases for a tax assessment, intimation thereof to the taxpayer, calling the manner in which the details are to be called for from the taxpayers, and the submission of details by the taxpayer. And all of this happens electronically. The procedure is also laid down for receipt and storage of information, retrieval of information or documentation in a centralized manner, general administration and grievance mechanism in respective centers and the units, circumstances to approve of individual hearings, and these hearings are not physical hearings but virtual hearings. The scheme as currently launched is applicable to audits, penalty proceedings with certain exceptions, and also to appellate proceedings before the first appellate authority in India, which is known as the Commissioner of Income Tax Appeals. As I said, notification has also been introduced for the Faceless Appeal Scheme. The notification sets out how the scheme will operate to eliminate personal interaction between the appellant taxpayer and the Commissioner of Income Tax Appeals, and to also clarify the tax authority's jurisdiction to exercise the powers and to perform functions to resolve appeal in accordance with the provisions of the scheme. Under this scheme, there is a National Faceless Appeal Center, there is a Regional Faceless Appeal Center, and there are appeal units which facilitate the conduct of e-appeal proceedings and to perform the functions of resolving the dispute. Once again, all communications between the appeal centers, appeal units, or the appellant, and inter-se between the faceless centers and the appeal units, etc., are all by electronic means. A person is not required to appear either personally or through an authorized representatives in connection with any proceedings under the scheme before the income tax authorities. However, the appellant or the authorized representative makes a request for a personal hearing to make oral submissions or to present the case before the appeal unit under the scheme. The acceptance of appellant's request for a personal hearing is at the discretion of the Commissioner or Director General. So once again, more importance is laid down to the manner in which detailed written submissions are filed and the manner in which evidences are filed before the first appellate authority in the appeal. Next slide, please. It is also envisaged that the faceless regime will be extended to other audits like the transfer pricing audit, collection and recovery of taxes, faceless revision proceedings, faceless inquiries, faceless verifications, etc. The provisions have been notified. However, the schemes for each of these individual mechanisms are yet to be rolled out, which will be done in due course. To sum up, while the government's initiative of going faceless is one of its kind, there are various practical difficulties associated with the same, which have been faced by the taxpayers, like non-intimation of notices being posted seeking of responses. However, given that the system is new and it is in the nascent stage of development, both sides will have to give it time to stabilize and evolve to make it more effective. The only sore point here is the restriction on the personal hearings, which traditionally have been seen as an effective way of communicating of the position of the taxpayer. Also, there are apprehensions of making the appellate procedures faceless, thereby taking away or restricting the scope of arguments before the tax authorities. which hinders what is known as the principle of natural justice, which is more important in appellate proceedings. But here too, one will have to adopt a wait and watch approach. Next slide. We now move forward to a few modifications made in the alternate dispute resolution framework of the which is available under the Indian tax regime. Traditionally, the method of litigation between the taxpayers and tax authorities on contentious issue has been the normal appeal route, whereby the taxpayer approaches the Commissioner of Income Tax Appeals, then the Income Tax Tribunal, then the High Court and the Supreme Court. However, the Indian tax jurisprudence also had since the year 1992, a scheme for providing an advance ruling in respect of transactions involving non-residents. The advance ruling provided advance rulings in respect of transactions involving non-residents, that is determination of a question of law or fact in relation to a transaction which has been undertaken or is proposed to be undertaken by the non-resident. In the initial days, the AAR saw a lot of taxpayers approaching it. It also pronounced major rulings on complex issues of taxation tax domain. However, a period of years, for various reasons, there was a substantial amount of pendency before the authority for advance ruling. This was largely due to the number of cases and applications filed, and also due to the inherent composition of the authority, which required appointments of retired judges of the Supreme Court and or the High Court. Considering the prolonged litigation, the Government of India felt the need for revamping the existing alternate dispute resolution framework in order to ensure quick resolution of disputes and settlement of cases. Various steps have been taken in this regard, namely replacing the authority for advance ruling with the board for advance ruling, scrapping of Income Tax Settlement Commission, constitution of a dispute resolution committee for small and medium taxpayers, and reduction in time limits for various proceedings. The salient features of the authority which will replace the board for which will be replacing the authority for advance ruling and which will now be called the board for advance ruling is that each board for advance ruling will consist of 2 members, each being officers not below the rank of chief commissioners, as against the current provisions of members consisting of law and revenue members. The difference here will be that the rulings given by the board shall not be binding on either the taxpayer or the tax authorities, and appeals can be filed against the same before the high courts. All the existing pending AAR applications would be in due course transferred to the board. Next slide, please. As I said that in the recent past, there were some doubts which were expressed, or there were some difficulties in authority for advance ruling completing the applications filed. Even the Apex Court of India, in one of its decisions referring to the Deloitte report on the advance ruling in India delivering greater tax certainty, observed that there is a substantial amount of cases pending before the AR due to its low disposal rate and lack of adequate number of presiding members, thus defeating the entire purpose of forming of an AR. The intent of the government is to give speedy rulings. However, the effectiveness of the newly constituted board would be tested in time, and the factors which will be impacting that will be the approach and the attitude of the members on the board, the time taken to dispose of matters, consistency in deciding legal issues, and the success of the faceless mechanism for complex. Next slide, please. In the past, there were also recommendations that a door for compromise should be open with some taxpayers who are errant, and that door should remain open for all times. It was in this background that the Income Tax Settlement Commission was established to provide the necessary mechanism for settlement of tax liability of a taxpayer and to give the person an opportunity to make full and true disclosure of its income at any stage of the proceedings. However, once again, the Income Tax Settlement Commission was not meeting its desired objective and hence has been discontinued with effect from 1st February 2021. An interim board for settlement of pending cases is being formed to settle the pending applications. Next slide. A few other relevant amendments. Under the Indian Income Tax Act, a concluded assessment could be reopened within a period of 6 years if in view of the tax department there was any income which has escaped assessment. The time limit to reopen has been reduced to 3 years from the currently existing period of 6 years. However, the reassessment can be done only if the assessing officer is in possession of information which suggests that there is escapement of income and he has obtained approvals from his superior authorities. At the same time, the time limit for reopening of assessments have been increased to 10 years in cases where there is evidence to demonstrate escapement of income of more than 5 million Indian rupees. And the approval has been obtained from the Principal Chief Commissioner or the Principal Director General, who is the highest ranking officer in a particular jurisdiction, without which the reopening cannot be done. Strict deadlines have been prescribed on the responses on the jurisdictional aspects, and taxpayers are expected to reply within 7 to 30 days. Next slide. There has been revision in time limits for completion of regular assessments, which are captured in this slide. To sum up, the Indian government over the last few years has taken various efforts to reduce litigation and to conduct tax proceedings in a paperless form by making optimal utilization. The income tax portal has also seen significant changes in line with the idea of jurisdictionless or faceless proceedings. However, what is needed is an implementable action plan which inquires relook of functioning of the tax department at each level and formulating solutions which are unique for each level of proceedings. Thanks all. Back to you, Colin.
Thank you very much, Ketan. I'll hand over to Neil now, who will conduct the panel session.
Thank you, Colin. We've got a couple of questions for our speakers today, and we'll just take you through that. We're conscious that we're running close to time, so we won't draw it out too much, but I think it'll be interesting to get a couple of questions in. So the first question we have is in relation to the exchange of information by the tax authorities with their counterparts overseas. How common is this? Do they just do it under the automatic exchange of information provisions in the double tax treaties? Is there a voluntary process that they follow? Colin, could I maybe ask you to comment firstly from an Australian experience?
Yes, certainly in Australia, with the Australian Treaty Network, it's a common feature to have the exchange of information article. The ATO, particularly with large disputes that have multinational features, will oftentimes exercise a request to obtain information from other jurisdictions. What we find, though, is that it's quite a protracted and formal process, and oftentimes, even if the ATO asks for that information early on in the review or dispute process, it can take many months, sometimes up to a year, to actually receive information, and oftentimes by then the review or dispute has sort of progressed to the next stage. So we don't oftentimes see information produced under that article actually being used real time in an audit process.
Thanks, Colin. Cindy, can I get your thoughts and observations on this as well, please?
Sure. I think from Indonesia, I also observe the DGT quite active about this, Neil. There are two types. One is the automatic exchange of information, and the other one is the exchange of information requested by the Indonesian DGT. For the automatic exchange of information, I have seen in just these 3 months, many of letters of confirmation or explanation requested because of that automatic exchange of information. And that obviously mainly about individuals, taxpayer. For the corporate taxpayer, I think I noted that there are some active requests by the DGT, not automatic. They send letters to authorities in Singapore, authorities in Japan, authorities in Australia, and they receive the information and they use it to trigger the tax audit, or they use it during the course of the tax audit. So Indonesia is quite active on this exchange of information. Yeah.
Great, thank you, Cindy. We've got another question that I'll throw to our other speakers. We've heard a little bit from you, Cindy, actually, in your presentation about the attitude of the tax office in relation to COVID-19. I'd like to ask Ketan now what the India experience is and what changes have arisen because of COVID-19.
So the government in India has been very considerate with the demands of the taxpayers by extending time limits under various compliance regulations from time to time. Even while physical functioning of the tax office in the initial stages of the COVID-19 pandemic was hampered, the tax officers were attending to requests which were being made electronically with the use of technology, and matters have been resolved in a timely manner from time to time. What is interesting to note is that even the appellate authorities, that is the judiciary, the Income Tax Appellate Tribunal, the High Court, and even the Supreme Court of India have been conducting hearings virtually almost seamlessly. So both the sides, that is the authorities as well as the taxpayers in India, are getting used to the new normal of having virtual disposal of cases and getting resolutions. While the speed is not as much as it was earlier, but it is surely much better than what was anticipated.
Thanks, Ketan. And Kevin, from your perspective, any nuances that we've seen in respect of COVID-19 in relation to China?
Sure. I think when we look at the situation in China in the past 2 to 3 years, the central government has been trying to reduce the tax burdens on taxpayers, given the downturn of the economy. So in the last 2 years, I think the number of tax reforms, which basically are trying to reduce the tax burdens of taxpayers, simplify the tax compliance requirements on taxpayers. And during the outbreak of the COVID-19, the Chinese government instructed the SAT to provide different incentives, different approach in reducing the tax burden during the COVID-19, including deferral of tax payment, reduction of tax rate, and whatnot. So I think in general, the Chinese tax authorities are very supportive, very lenient, to the taxpayers. But I think they're always, the other side of the coin. That I think if we look at the economic performance of China compared to the rest of the world, I think we are picking up, we are rebounding. And I don't believe, the tax reduction policy will go on forever. So we also start to see the Chinese tax authority to focus on certain specific tax audits, and which basically try to close the loopholes and try to defeat any improper activities, conducted by the taxpayers. So I think down the road, the situation in China may be tightened up a bit, but I think it depends on the development of the economy down the road.
Great, thank you very much, Kevin. Well, that's about all we have time for today, everybody. So I'd like to thank our speakers today for their very informative presentations and also their insightful comments during the panel session. Colin, Cindy, Kevin, Ketan, thank you for today's presentation. And thanks to all of you who were able to join us. We'd like to encourage you to fill out the short survey that should pop up on your screen momentarily and tell us what you think about today's program. If you did join us late, please note this presentation will be archived for future viewing. And if you feel that others would benefit from this webcast, please do feel free to share the webcast via the share this icon or have them visit the Debriefs website. We will respond to all the questions submitted during the webcast soon. Also, if you think of any other questions or comments later on, please feel free to reach out to myself, Colin, or any of our speakers today. We'd be more than happy to talk to you. Lastly, from all of us at Deloitte, thank you for your participation in Deloitte's Asia Pacific Tax webcast today. Thank you and goodbye.